All right, folks, I want to explain to you now, the market's got another couple hours to go, but I'm seeing a trend and I want to get this information to you as soon as possible. The Dow futures, as you could see here, are up about 200 points, 193 points, 194 points, roughly 200 points, which means the actual Dow or the diamond, if you trade ETFs, DIA, it's up about 200 points, and we're near all-time highs. We're not quite there yet. We are. We're right there, like within a few ticks of it. But here's the thing you need to understand and pay attention to this. The Dow Jones, notice this entire trading range right here that occurred. Here, let me draw it for you here. It'll be easier if I can just draw it. Here we go. Notice we've been moving up here, and notice we have been moving down here. Now, this divergence, this is called divergence, when the RSI oscillator and price action are moving in the opposite direction. One is making higher highs and the other one is making lower highs. That's very powerful. The reason I'm showing this to you is because we had it on the S&P 500, we had it on the NASDAQ, and now it's prevailing on the Dow Jones. So that means all three indices are now showing strong divergence on the cash and on the futures contract. And the reason this is important is the futures contract always has premium, so it discounts what's coming ahead, and it's showing the same thing, which is telling me that markets are genuinely overbought on an RSI basis, on an overbought momentum basis. They're stretched out according to the oscillator. And then if you look at the NASDAQ, and I wanted to show you this as well, the momentum levels, the percentage of stocks trading above the 50-day moving average is at 82%, and the 200-day, which we just now started following recently, is at 83%. Now, that means out of 100 stocks in the NASDAQ 100, 83, and I guess it's one stock is above and below, above or below, because there's only 100 stocks. It's telling us right now, let me show this to you in a different graph, that over 83, close to 85% of stocks are trading above the 200-day moving average. And if you look historically, this first started with the 50-day moving average, but now it's moving on to the 200-day moving average. And if you look historically, you will see that these levels, and this is a monthly chart, this is going back to 2010. We're going back almost a decade. You could see that when the percentage of stocks in the NASDAQ 100, this is the top 100 growth and tech stocks, hits over 80 percentile, not percentage, percentile, momentum levels tend to decline. And when we look at the 50-day, let me show you the 50-day, those levels, as it appears to me right now, have already started declining. Because remember, last week we had 90% of stocks. 90% of stocks, that's 90 stocks out of 100, were trading above the 50-day moving average, and that has been declining. Take a look at this. As I told you it would, right here. You see that? No, that's starting to decline. This is monthly, but look on a daily basis. See that? We went up to 90th percentile and we're declining. The problem with that is, and this is something you need to understand, this is really important and something that I usually don't give away for free, but I'm going to explain this to you. Notice NASDAQ stocks. Notice the price is moving higher. Pay attention, maybe take a piece of paper, write this down. Price is moving higher. But instead of 90 stocks participating in this rally, you only have about 82 stocks. So there's less stocks participating in this rally. What that is, see higher prices? If you don't believe me, I'll show you a smaller time period. See that breakout right there? We're going higher, higher and higher and higher. This is the highest high we've been. We're at the highest high. But if you look at momentum levels, sorry, I got to go back and forth. Usually I have these all ready to go. But if you look at momentum levels, you will see, as I just showed you, it's not 90% anymore. It's only 82%. So there's about 7.5 or less, or 8 stocks less trading above the 50-day moving average, but the NASDAQ continues to make all-time highs. So imagine you're running, right? You're running at 20 miles per hour, and somebody takes a hammer and stumps one of your toes. but you still got to generate 20 miles per hour. It's going to take a lot more of your body to do that. Or the example that I give in my program, let's say in my bootcamp program that we do daily, let's say you're driving a 6-cylinder car at 20 miles per hour, and 2 of those cylinders give out. But you still got to maintain 20 miles per hour. You're pushing that engine a lot harder. And that's what we're seeing now. And typically, narrowing of momentum, write this down, narrowing of momentum leads to a correction, a minor correction. Not a major correction, but a minor correction. If we went to the 50-day line, if we got, let's say for a few days, 50 or 60% of the NASDAQ stocks trading above the 50-day moving average instead of 82, that would be enough to cause us to cool off a little bit. But right now, it's like a rubber band that's been stretched out, and it's trying to stretch out, and it comes back a little more, and it tries to stretch out again. It's just overbought. So you got momentum levels, you got the NASDAQ, the percentage of stocks above the 50-day moving average and the 200-day moving average, all telling us that the markets are overbought in the short term. So in the short term, not short term. So for the next week or two, it's a good time to focus on income strategies or strategies that are not dependent on market direction. And that's what we've got on your plate for you today. Folks, let me level with you. To generate large, and I mean large amounts of income in this market, income is different than speculative. We're talking income you can spend. You got to get creative, all right? There's no way around it. Saving accounts, stocks, heck, even bonds, they're paying next to nothing these days, thanks to the Fed's low rate policies. But I've got good news for you. This is where my friend and fellow trader Rob Booker comes in. He just developed a brand new strategy. Get this, it allows you to collect $1,050 or more every Monday morning like clockwork. Imagine you wake up Monday morning, you look at your bank account, you got at least $1,050 more than you had on Sunday. It's great, right? No buy and hold. And it's unlike anything you've ever tried before, I promise. And the good part? It's super easy. It's stupid easy, like extremely easy to do. All it requires is 3 clicks of your mouse, and you get cash instantly deposited to your trading account every Monday morning. Now, I'm going to be paying attention to this. This is really important, and I'm going to see if I can utilize this in my toolbox. And I want you guys to do the same. Check it out. There's no cost. There's no hidden fees. Just follow the link below. Learn all about it. What have you got to lose? Talk to you soon.